which makes or manufactures oral and dental products, and the stock is trading at a 52-week high. If you pull up a longer-term horizon or of the stock, you will see that it's up almost 83% in FY18 so far, which is the last 3 months. And in the last 12 months, it's up 127%. What's the buzz? Well, we're here joined by the management, Mr. Nanda, to detail what the company does and what the outlook is. Thanks a lot, Mr. Nanda, for joining in. First up, if you could tell us your revenue breakup in 3 different manners. How much do you get from toothpaste? How much do you get from toothbrushes? How much do you get from domestic business? How much do you get from your international business? And how much do you source from your own brand and the contract brands?
Okay, so the first answer is that we do roughly about 50% from toothbrushes, 50% from toothpaste currently, till our new toothpaste facility, which is completing in the month of June and shall be operational from 1st of July. Post that, our toothpaste share will go up substantially. We would be close to 70-30, 70% from toothpaste and 30% from toothbrushes in terms of capacity, not in revenue. Currently, the revenue is 50-50. Now, on the second question, about 95% of our revenue currently is from domestic sales, only about 5% from exports. We are actively pursuing and participating in various export exhibitions in order to grow our share there also, as we had earlier way back in 2008, 9, 10 when we were doing about 30% exports. Thirdly, you asked me what is the share of our own brand. So currently our own brand is about 10% of the overall sales of the company, which we are consciously trying to grow to about 50% by 2020.
Okay. Hi, Nikhil, good afternoon to you. Also, between toothpaste and toothbrushes, which is a higher margin segment for you?
That's a very difficult question to answer, because with each customer we have different profile in terms of the way we work. Like in the case of some customers, we do the design development for the toothbrush handles, which are our IPRs, and we just lease out the designs to them, so we have a higher share there or a higher gross margin there. In some customer case, they give us their own design, we just produce it for them. Similarly, in case of toothpaste, there are some customers for whom we have developed the formulation, which is our formulation, our IPR, and we've just given it to them to sell. In some but most of the toothpaste, our customers give their own formulation.
Okay.
So
who are your key clients?
Well, currently, a couple of them, we have Dabur, we have Patanjali, we have Amway, we have Vestige, another multi-level marketing, and we are in talks with 2 major Indian brands for developing new toothpaste and toothbrushes for them. Nothing formulated yet, but yes, we are in aggressive talks.
All right. Mr. Nanda, your FY17 revenue is close to around 106 crore rupees. If you could tell us how much came from, say, Dabur, Patanjali, or your top 3 clients, how much do they contribute to your revenues?
Well, I can't give the breakup because of the confidentiality, but yes, I can tell you that roughly about 60%, 65% comes from the top 3 clients.
And they would be who?
I can say Patanjali, Dabur and Amway.
Okay. FY17 was quite a turnaround year for your company. Is this performance sustainable, given that, the focus at your end is also shifting to boosting your own brand?
One thing we have very consciously, we've been very conscious about is that we are in no way competing with any of our customers. So our brand and our product range is absolutely different from what we produce for our customers. So there's no conflict of interest at any given point of time, number one. Having said that, number two, we have a separate team with key account managers who are consciously pursuing with our existing and new proposed customers with whom we are negotiating to take the contract business as a separate business category in its own self. However, we have a separate team which is on the branding side, and there is a CEO who looks into the complete branding part of the business. We have been growing both the businesses very consciously as separate two verticals.
What are you hopeful of doing, in terms of top line growth for FY18?
Well, we are very confident we should be doing a minimum of 20 to 30% growth on last year in this financial year.
That is including the increased capacity, or that is organic?
Of course, we take into account the increased capacity. The increased capacity is primarily in order to also make our existing capacity a lot more flexible. Because when we set up the initial capacity of toothpaste, that was with regards to only Procter & Gamble, who was our only customer for whom we had developed that facility for the Oral-B toothpaste, which was launched at that point of time. However, now we are making it a lot more flexible facility where we can do different variations, different size, different formulations. Just to give you an example, some formulations like Ayurvedic formulations take 6 hours for manufacturing, while some of the non-Ayurvedic, the cosmetic formulations take only 2 hours of manufacturing. However, the filling capacity and the some of the brands, they sell the 10 rupees toothpaste, the maximum. Some of the brands, they sell only the family pack 200 grams maximum. So we were very restricted in terms of our capacity earlier. With this new expansion, we'll be a lot more flexible and we can do a lot better in terms of utilizing our existing and new capacity.
All right, Mr. Nanda, then leave us with two key numbers. One, what exactly could the impact of the GST be on your margins? 28% has come down to 18% on toothpaste. And secondly, you've started talking about your own brand doing better sales and the new facility, which could be much better. What would your EBITDA margins be? They were 9.6% in FY17. Can they go above 12% in the very near future?
See, I can't give a number, but I can tell you one thing for sure, that we were working at a much larger EBITDA margins.
That's right.
Before the small couple of years downturn that we had. And we had consciously taken work in order to keep the company running at much lower margins. However, now we are in a much better position to increase our EBITDA margins, especially from our own brand. So I think we are looking at some good growth even in our EBITDA margins number going forward from here. Till 2020, I can definitely say in next 3 years we should be at about 14 to 15% EBITDA margins for sure.
All right, Nikhil, we appreciate your optimism, and I'm sure as does the street. Thanks very much for stopping by this afternoon, and we hope to touch